Hello, welcome to another edition of Nucleus Investment Insights. We are live here today with Jonathan Rochford from, sorry, I've got a complete mental blank on your company name again. Narrow Road Capital, that's right. Apologies for that. And yeah, so we've had Jonathan on a few times. We wanted to talk a little bit about private credit markets and what's happening there. And then we really wanted to jump into productivity. So Jonathan recently wrote a piece, and we've obviously got a productivity summit going on at the moment. I thought it was a good opportunity to talk through some of the issues there and what it means for Australia and what we're really looking to come out of the productivity summit to sort of show, I guess, from an investment perspective, that we think we're headed things in the right direction, rather than sort of some of just the preordained outcomes that the speculation is there. But so thanks, Jonathan. And just a quick reminder for everyone that everything you hear today is not personal advice. It's all general in nature. If you do want to get any personal advice, you can follow the show notes and book in for a call with one of our advisors who can help you out there. So with no further ado, Jonathan, thanks for coming back.
Great to be here.
I thought maybe we could start with your thoughts on the private credit market, probably to get before we jump into the productivity, and just what you're seeing in those markets at the moment.
Yeah. So my last monthly memo, I entitled it "Things Are Starting to Get Silly." And I think that's a general reflection on where markets are at. And interestingly, in sort of the last week or so, Howard Marks came out with a very similar sort of thesis on where things are at. And we are seeing people starting to stretch a bit, starting to put aside credit standards somewhat, just to get that little bit more yield, or to keep getting the same yield that they are used to getting. So it's definitely a time for caution. I wouldn't say it's at crazy levels and you go out and sell everything, but it's a good time for caution of just assessing, am I getting paid fairly for the risk I'm taking?
And so, and I think that's sort of within equity markets, obviously they seem to be priced at levels that have rarely been seen before, and they're pricing in. You can certainly justify it if everything goes well, and all these tax cuts come through. We get governments are out there spending lots of money, and a lot of that money sort of ends up in corporates, and everything's fine. Then I think you can sort of justify it as long as you're getting some growth. But what it sounds like is you're sort of looking at similar things in credit. As long as everything's fine, it's good. But if anything starts to go wrong, these aren't the types of yields you want to be paying for.
Yeah, in some cases, yes. And I think that's a fair comparison. When you look at all asset classes at the moment, I don't think there's many. There's very small segments here and there where you can say, I think I've got a good expectation of outperformance. I think generally it's a case of steady returns, perhaps even below average returns, given the elevated starting points. And whether that's private equity or infrastructure or real estate or credit or listed equities, I think pretty much the correlation is there. If people feel like, okay, we're being aggressive with equities, is there anything in credit that's cheap? Okay, let's run to that. And so very quickly, the gaps are being filled in where there's a good value. And yeah, credit's in no way immune from that sort of pressure to buy, pressure to invest.
Yeah, and so certainly we've seen yields have fallen a lot in particularly the Australian market. We're looking at quite low yields, and so the thought for people is, okay, now if I can't get the yields I want in there, now I need to start looking at start looking at some of the debt markets. But the debt markets sort of seem to be following that same path in terms of the yields in there are quite low as well in terms of, I guess, spreads over governments, I guess.
Yeah.
It's very much at that sort of bottom end of the ranges.
Correct. Correct. So certainly if you follow, one of the really good indicators to follow for credit spreads is US high yield bond spreads.
Yeah.
And those have come down quite a way. They're historically tight levels, not record tight, but they're the sort of levels where they might sit there for a year or two, but they certainly could be a lot higher than they are now. And if you get a sell-off, they will be a lot higher than where they are now. So the ability for those spreads to fall further and get capital gains is limited. The ability for spreads to go higher, it's certainly there when you look back at sell-offs, in the last 20 years. So from that's a really good public indicator of where spreads are at. But we're seeing it across, investment grade bonds. Securitization in Australia has had a massive wave of capital come in from overseas and additional domestic money come in, spreads have come way down in that sector, and so that's getting caught up in the chase for yield as well.
Yep.
Listed hybrids, obviously, the bank hybrids are slowly winding down, and people are coming up with all sorts of replacement listed securities for those now. But the listed hybrid spreads are down as well. So it's pretty consistent.
And being phased out over the next couple of years.
Yeah, correct. And so do you do, the tier 2 subordinated debt instead? That's a fair option. It is a bit less risky than the hybrid. Certainly doesn't have those equity conversion features unless the bank is essentially broke. So that's a positive, but spreads are lower. And for some people, I might be saying, well, that's just not enough yield for me. I want something more. And that's where private credit certainly has had a place really in the last 5 years. It's always been there, and I've been operating in the space arguably since sort of 2004. But it's really kicked off in the last 5 years with people just saying, where can I get some yield?
Do you think there's a within that market? Because I certainly see a lot of advertising and a lot of, I guess, the private credit markets in terms of people talking about, hey, these are great uncorrelated returns to the rest of the market, and they fit really well in your portfolio, and you don't have to worry about them. And sort of, to me, it sort of rings those alarm bells of, look, is if there's a bit of a flood of capital coming into that, and you've got people there. So the last big blow up was really, what it was 15 years ago. So you've got plenty of people out there who have been running these things for 5-10 years who have just never seen a real downturn. Right. They had a bit of a scare in the pandemic, but then government money sort of flushed everything away. And so I guess the worry I have in that market is, are there new people coming in who just aren't going to the same standards as what people who have seen a few more cycles might have done?
Yeah, that's completely fair comment. I'd say it seems like every second month I hear about a new manager in the space coming in and doing private credit. And some of them have a background in the banks doing it. They've been doing it for 10 years, 20 years. Others come in and they're coming from adjacent sectors, or they're coming from investment banking. They actually don't have a lending background, but they just say, well, this is a hot space. I want to get into it. I can charge some good fees. Yeah.
Or they've got a background of doing deals and raising the money with these things, but not actually managing.
Correct.
The managing the defaults, which is the big part of it.
Yeah. That's absolutely true. It's easy to lend money. Getting it back's the hard part.
Yeah, absolutely. Okay, well, let's jump into the productivity side of it then. So we're in this sort of 3-day session. The Productivity Commission had put out a number of different papers beforehand, sort of talking through what the main issues were, and I guess. And you'd written a piece a couple of weeks ago about it. Do you want to maybe give us sort of a little bit of background on your piece, and then maybe we can jump into some of what we're seeing coming out of the Productivity Commission and what you're looking for that sort of says to you we're headed in the right direction versus we're not.
Yeah. So obviously this post the last federal election, the federal government said, we're going to have this summit, we're going to focus on productivity. And we'll really get a sense probably tomorrow and the evening news tonight as they sort of announce things and tell us what they are going to commit to, how serious they are. Expectations were very, very low with the summit. And particularly when they say we're not going to touch, tax reforms until the next election. Tax reforms are one of the most obvious things that Australia will have happen in the next 10 to 20 years. We can do it now and reap the benefits, or we can delay it and continue to have rubbish productivity, but we will reform the tax system. There are certain changes that are inevitable as the population ages.
And so one of the bigger one there is land taxes, and it feels like every study they've done into this for the last 2 decades, probably at least 15 years. I feel like we've had reports coming out saying Australia needs land taxes.
Yes.
No government wants to actually get front up and do it. It doesn't, as I said, it's not on the agenda. I know that was one of your points.
Yeah, so it's interesting because the ACT is definitely going down the track and has been for a good number of years. They're phasing in, I think it's a 25-year period. Victoria is up their property taxes, but that's predominantly targeting investors rather than homeowners. In New South Wales, the previous New South Wales government had an opt-in sort of system where they said when you buy a new property, you can choose to pay stamp duty or you can choose to do more of a land tax ongoing sort of fee. And obviously it's an annual fee, so it's a much smaller amount than the stamp duty. So that was a really good way to introduce it in the sense that you give people choice. However, change of government, the government said, no, we don't want that system to exist anymore. We're going back to stamp duty. So it is tricky, but it is one of those things where when you go through the numbers, and that's both on economically, what is the best way to raise tax? And clearly land tax is quite superior.
Yeah. And why?
Why? So with a stamp duty, someone will pay the stamp duty. They can live in the property for 40, 50 years and they've paid once and that's it. With a land tax, you pay a much smaller amount, but you pay it each year. Land tax is the only wealth tax that really works. So people talk about death duties. People talk about, just a wealth tax on an annual basis as part of your tax return. Those other things lead to wealthy people leaving the country, taking their taxes, capital jobs with them. Land tax is the only one where you can really put a wealth tax on and it works because the assets can't move. And one of the things that people who, and there's not necessarily a huge number of people who are against land tax. People who own already, yes, arguably they might be against it. But if you're talking about the really big numbers, someone who's very wealthy, a $100 million mansion, they're still going to buy that. And they're still going to pay, $1 million or more in land tax a year if that system is in place. Rich people love to buy property. We know that here in Australia.
Yep.
And the only way to really target that wealth, as opposed to the income and the profits, is through a land tax.
Well, and I think as well, it's that part, isn't it? That the cost of collecting on that is very low in terms of, and it's much easier to dodge, much harder to dodge.
Correct.
In the end, with paper property, you're like, I made $1 million, but they're over here, and all of a sudden it's offshore and back, and it's all gone. Sorry, you don't. Whereas the property, it's owned by this person, owned by that person, that's over there to it. Well, somebody's got to pay it.
Absolutely.
The property still exists. Yeah.
And there's other good reasons as well. So one of the simple ones is a well-implemented land tax will raise the revenue at the state government level, and it takes the burden off the federal government. So when I've looked at tax reform, there's a couple of major components, but one of the things behind it is the feds raise a lot of the tax here and they pass it on in grant form to the states. We actually would like to change that. We would like a system where the states raise more. So cutting income taxes and increasing GST naturally does that. That's more money that goes to states. And increasing a land tax rather than having a stamp duty increases the regular income for state governments. So you don't get the boom and bust. Property cycle is fantastic. There's transactions. State government's raking in the revenue. Oh no, now we've got a recession. People don't want to change.
Yes.
The revenues collapse. A land tax is much more consistent as well. So shifting the revenue to the states, taking the pressure off the federal government, taking the pressure off income taxes.
Yeah, and making it less cyclical as well in terms of just when you want governments to be out spending money, all of a sudden they haven't got anything because nobody's transacting on properties and
Correct.
all that type of stuff. Yeah. So okay, so that's so as we said, one of the key ones there is not on the table. GST, raising the level of GST, that's been one that has been mooted as it's popped up as at least they're floating that balloon to see how much flack they get from the press on that one.
Yeah. And Australia's well behind the curve on this one. So I generally don't like to talk about European economies and how they tax relative to Australia, but certainly compared to the Europeans, we are behind. And we just penalise people for working with top income tax rates of, depending how you count it, it's either 45, 47 or 48.5 because there's the Medicare levy, the Medicare surcharge on top. So you're getting up close to 50% of your income for higher income earners for those marginal dollars is being taken away. That is a huge disincentive to work more. It's also a huge incentive to leave Australia and go to a lower tax jurisdiction. And one of the things that's so often forgotten in this debate is many of our best and brightest and highest income earning people go overseas. Tax is part of that. It's not everything, but certainly if they're going to, say, Singapore or the Middle East, tax is probably a key motivator in why they're spending their best income earning years in other countries and not in Australia.
Yeah. Tax evasion. That's the other. I don't know. I haven't seen a lot out of it. So out of the current one, I mean, that's one area that seems to me, this is an evolving beast in terms of companies are always trying to come up with better ways of getting around tax, and people are doing the same. And it just needs to be a constant sort of ongoing. Things need to change just in order to keep up with however people are getting around it. But it doesn't seem like we've had a lot of, like, probably the last 10, 15 years, there seem to have been a lot of change in terms of the way it's being done, and which would seem to me there's more leaking out of it. I haven't heard again a lot from the Productivity Commission on this. I don't know what you're.
Yeah, it's one of the most obvious things for particularly a federal government to do, that we are leaking tens of billions of dollars in potential tax income a year because we are simply not trying to collect it. And just as a sort of funny little aside, I looked up in AO, I said, what is Australia's national pastime? And it said swimming. And cricket and pick your code of football can get a mention, but swimming is Australia's national pastime. I'd say we're almost getting to the point where cheating on your taxes is the national pastime. So some of the most obvious examples, it's now estimated over 50% of tobacco purchased in Australia is illegally imported tobacco. So people are so sick of paying $50 a pack, they're now paying anywhere from $10 to $20 a pack, and they're avoiding the tax.
And we've created that ourselves, haven't we? We just basically said, let's keep jacking the rates up to the points where, there's obviously a level where you go, okay, I'm going to charge $1 million a cigarette. And you're like, okay, I'm not going to sell any.
Correct.
And it's all going to be illegal now.
Yes.
And then you go, okay, well, where's my, I need to pick a level where, you prefer people not to be smoking, but you don't want to create a whole illegal industry because you've jacked the prices up so much.
Yeah, so that's one example. Another little anecdote is we've probably all seen the Ute ad where they call up Rafael Nadal and they say, hey, can you come and do some tiling for us? And he says, oh, I'm pretty busy at the moment. Is it a cash in hand job? Right. We joke about it, but we all know that that's happening. I've got friends who've told me they've had tradies come, and the only way they could get tradies was paying cash in hand. Right. And one of them said he had to go around to several banks on a Friday just to get enough cash to pay all the tradies. It's just so commonplace now that people are avoiding tax in such obvious ways, and we're really not trying hard. And then you've got things like, insolvency and phoenixing. That's another one where the ATO could be far more diligent in collecting taxes early. And if businesses are running up tax bills, shut them down. If it's such a bad business, they can't hand over the pay-as-you-go they've collected from the employees' salaries. They can't hand over the GST that they've collected from their sales. If you can't do that on time, there's something fundamentally wrong with your business. And it probably should cease to exist. And certainly if the owners and the managers won't put their hands in their pocket and put some more equity in the business, that's telling you there's something wrong with the business.
Yeah, I haven't seen, the US has got a couple of these, which seem to make a lot of sense to me in terms of alternative minimum taxes or something where you basically say, well, whatever, it's some percentage of sales or some percentage of some other number that's not just your net profit in terms of saying, rather than being able to, we were speaking a little bit about it earlier and saying, if you need to optimize for one variable, it's really easy. I need to optimize to get my taxable income as low as possible. And companies, when you read your company accounts from an analyst point of view, they basically have two accounts. There's one account that you provide to the tax office. Correct. It can be a completely different set of accounts. And there's this big difference between the two. And there's a question of saying, well, who am I lying to the tax office or am I lying to investors? Who's the one? And so we run within our models, we run two different versions where we say, well, what happens if they are actually lying to investors? What happens if they're lying to the tax office? Who looks better, and which companies still look better under that face? And so it's the idea about saying, well, no, if you add in a few more where it's like, if you say it's a company, it's like, okay, it's, at the moment it's 30% of profits, but maybe it's 10% of your EBIT, or it's, 1% of your sales, or whatever the right numbers are, so that you go, well, you're paying one of them. And now if you want to try and shift one of those numbers around, it's much harder to shift them all around.
Yeah. So there's a couple of things that have been tried or being considered. So one of the things that the productivity put forward was a cash flow based tax as a on top of general corporate profit tax. And so the idea there being, if you're investing a lot in new capital, new equipment, you would not be paying that tax. But if you're not investing, then you would be paying that tax. Essentially saying, how can we encourage companies to put more capital to work, to invest more in their businesses?
Yeah.
And if you invest more capital, you should get more productivity.
Yeah.
That's one way. Another way.
I like the concept of that one. I just worry that when I see that one, I worry that it's like there's some sort of investment vehicle now that's crops up that the company's investing in this investment vehicle that happens to give money across to somebody else and borrow money, or there's I feel like I worry that there's that sort of going, here's a rough attempt at it, but there's so many holes in it where people just end up sucking money out of these companies, leaving shells of debt behind and pretending it's all CapEx. Yeah.
And to be fair, I'm not saying that's exactly how it happens. When I've spoken to people who are involved in research and development, deductions and how that system works, they've got plenty of stories about how people are playing games to say, oh, okay, you can put this in the R&D deductible bucket, you can't put that in, right? How can we change it so it does fit in and we get more money back?
And look, and I've seen we've won a number of innovation awards for the things we've done, and we've used some of that. And the irony of that whole system, as you look at it, is when you are a small business getting started, it's actually quite hard to navigate it. And then you talk to some of the bigger companies who are using it, and you're just like, just a minute, we're claiming relatively small amounts, and are genuinely trying to create innovative product and winning awards for it. And then you're looking at these companies that are like, just a minute, you're just a big monolithic existing company that's, but you're willing to say, okay, I can put somebody on and spend $200,000 for them because they're now going to get us back 2 or 3 million in working out what can I shift and what can I work around. Whereas as a smaller company who's genuinely they're like, I'm not hiring somebody for 200 grand to do all my, to work out how much we can dodge on all these taxes. So yeah, and it's a problem. Constant problem with all these, isn't it? Is that I feel like you do need to keep changing things just in order to say, well, people are going to do dodgy things. At least if we have to keep making them move and change and make it easier for try and get around the way people are trying to get through those.
Yeah, keep the taxes low and simple, and then you collect more. Once you put the rates up too high, that's when people really spend a lot of time and money. How can I gain this system? How can I get out of this? Because this is just massive extraction of my income and my profits.
Yeah. That's probably a good tip for me to do a quick sales message.
We'll be back with the investment insights very shortly. Nucleus Wealth is an active and passive investment manager. If you like what you're hearing and want some help with your investing, we can do it for you via our active portfolios. Our tactical and core portfolios use the insights shared in this podcast to construct and manage your investment. We blend tactical portfolios to offer our combinations of international shares, Australian shares, government bonds, and cash. We vary the asset allocation with the goal of protecting your capital in times of market uncertainty. We also have active international and Australian share portfolios. These are chosen using our quality and value investment philosophy. You can find out more at nucleuswealth.com. Now back to the show.
Right. Apologies. Sorry. It's the one we wanted. Right. So back to some of the other things you sort of hit up on your article. So migration, big one. So explicitly hasn't been spoken about at all. And I think we've had the couple of the pushback. I think there's people talking about organising some marches to complain about the excess levels of migration, and then all of a sudden it's like, no, we can't have Nazis, can't have Nazi marches in our cities.
Yep.
That's it's sort of like anything sort of remotely in that bit gets painted as this must be far right people organising this. Can't possibly be people who just want like a reduced level of immigration. I know we've had a lot of we've spoken a lot in the past on this about just the problems of people. Our house and construction industry just can't seem to handle the number of people. Like we're running at quite high levels relative to history, and we're still miles behind on what we need. And then secondly, the level of capital per capita is sort of going backwards now in terms of Australia's got a fixed amount of capital. yeah, we'd love to see more. But I guess your thoughts around the migration issues. I think we're probably roughly on the same path.
Yeah, yeah. And I think going back to that sort of, hot topic, is it okay to discuss this topic? The simple thing that I would say is, if we're going to import, GPs and coders and other people who are paid $200,000, $300,000 a year, and they're going to pay lots of tax and be really productive in our society, everyone's going to support that.
Yeah.
The reality is our migration system is just not doing that in a meaningful way. We are importing people who are earning less than the average Australian worker, and we're calling them skilled workers. They're not skilled, or if they are skilled, they're not working in the jobs that they're supposed to be skilled in.
I think the Engineers Society said there are 100,000 people driving Ubers who have an engineer's degree.
Yeah.
For Ubers or taxis, yeah.
Correct. And it'd be interesting to know how many of them are locals and how many of them are internationals, to get that sense of whether it is, are we actually training too many engineers? I simply don't know the answer to that question. And so if there's a whole bunch of locals doing that, it may be the case, or it may be actually they're predominantly or almost all migrants, in which case we have an issue. And the productivity summit is dealing with one of these as one of the more minor issues they can agree on, in saying, well, how can we get people who have those skills overseas and get them ticked off that they count as an engineer or a scientist or whatever it may be here. One of the simple ways, though, to address that is, rather than saying you have this degree or you have this work experience in the Middle East or Africa or wherever it is to say, we'll give you a visa, or we'll allow you to interview online internationally. And when you have the job offer for a high-paying job, you're good to go. Rather than saying you tick the box because you've got a degree, no, you tick the box because you've got a high-paying job offer. It's the simplest way to bring in people who really have the skills that we need.
Yeah, absolutely. But we're not seeing any of that. There's no mention of those, and possibly as well. The other possibility on what you're saying was it may be an indictment of our current university system as well. In that, are we flooding it with so many people from overseas who are just here to get a degree in order to get citizenship, that actually whatever they're studying doesn't particularly matter, and they're paying enough that university, if you're paying $200,000 or $300,000 a year, $200,000 a year for in total, sorry, $200,000 or $300,000 in total for a degree, the universities are highly incentivized to pass them, and so they're coming out just without the skills they need. And this might actually be our university's fault as well.
Yeah, and I guess across education, there's actually quite a spread. So we have huge numbers of people who are coming in to learn English and do other very basic courses here. Respectfully, that's not earning a lot of income for Australia. Those courses are cheap. I just did an internet search just as a way to find this out, and websites pop up straight away. What is the cheapest course I can do in Australia so I can get a work visa?
Right.
And that there's been a fair bit of work done on this. The articles are circulating out there for those who can look for them. There are a lot of colleges that in many cases are not believed not to be training anyone at all. They're just taking the money, ticking the box, and then the person can work 20, 30 hours a week. And if they want to work more hours, well, they just take a cash in hand. So the universities are part of it, but to be honest, if people are coming here and doing high-paying degrees, that's adding something, and there's a decent chance they can actually get employed at the end in something that's going to be valuable to Australia. But if people are coming here doing the cheapest course they can just to get a work visa, or if they're doing a degree and they can't get employed in skilled work after they graduate, that is effectively just making our housing system more dysfunctional, and it's putting downward pressure on productivity. It's holding down wages for the lowest income Australians. And one of the things that's quite interesting with the Labor government is that they have gone bananas with migration. It's twice the level it was under any previous government. That's how big a migration push has happened under the Albanese government. The two things, if you really want to help lowest income Australia, put upward pressure on low skill jobs and the wages for them, put downward pressure on rents. And excess migration is doing the absolute opposite of that. And it's one of those things where I wonder, if people figure this out, are they going to vote for the Greens? They're going to vote for the Teals? Are they going to realise that Labor is actually going directly against the interests of the lowest earning workers?
Well, and then this comes back to this point, isn't it? In terms of, we spoke about, in the end, productivity to me is you need capital. You need more capital per worker, more capital coming into the system. We've got it going backwards because on a per capita basis, more capital coming in, but we're growing our people faster. And then the other problem we've got is that if we're going to spend most of our capital building housing and roads and infrastructure to house the new people who we're bringing in, it's like, well, just a minute, we're not really improving the state of affairs. Like the capital should be in things that are going to improve. It should be existing business, improving the productivity of existing businesses, not sort of jam packing and then trying to backfill.
Correct. And that is a great point. In Australia, our asset base is so heavily skewed to residential property. We've got a tax system that really encourages that to be the case, with negative gearing, with capital gains tax deductions. We've got a migration system that's just putting far too many people in the country. We can't build housing and infrastructure fast enough. So we really have this, and the RBA cash rate is low when you look at it relative to inflation, the tax rates we've got. So again, the RBA is saying to people, don't be silly and save. Either spend your money or lever up and buy an investment property. That's the way our system all comes together. All those pressures putting house prices up.
Yes. Yeah. So this is one of those ones where, for me as well, is we've sort of set up our system exactly, and as I said, we've set up our system from the perspective of the RBA. They haven't got any other choice. They've got one lever to pull up and down, and it was a little bit on credit standards and stuff like that and curves, but really they've got one lever. And so since we've set up our tax system in this way, it's sort of that's all they've got. So I guess one of the things I've always wondered is why we haven't seen any. One of my policy things would be saying, I'd love to see a minimum interest rate of say 3% or whatever it is. You can't go any lower, and then let's start. The government can, the RBA can start, actually delivering checks to people if they want to stimulate below that level. They can just some other way to stimulate, because we know that the issue when we got down to zero and then we were starting to give banks, interest rates where they can borrow effectively at negative rates and things like that. It's actually saying, well, we know that just creates all these problems.
Correct.
We'd be much better off saying, let's put a bar somewhere higher and then stimulate in other ways.
Yeah. So I've put forward, and some people agree, some people strongly disagree, but the way I've said the RBA should be forced to work is look at the inflation rate, look at the tax rates, and look at the person who's on the highest marginal tax rate and say they need to earn at least a neutral return after inflation, after tax. Now, that would put the RBA cash rate up quite a bit from where it is now. But it would also focus everyone's minds on, why are the tax rates so high? The tax mix is set up incorrectly. That's the lower income increase the GST, so that would help. But the ultimate flow-ons of that is people will save more. And Economics 101, you want people to save more because savings become investments and investments grow the economy. That's where productivity comes from. Rather than having a low cash rate where you're saying, please go and borrow money, please speculate with it, flip it around the other way. No, you get a good return when you save your money. We're encouraging you to save money, to pay off your debts, and to invest in good things, not just overpriced housing.
Yeah. Now, one of the issues we're starting to see crop up a little bit on that point is, so we obviously have these other forced savings bits, which are super to put more money into, but our super is increasingly going offshore, and so there's this question, isn't it, about, okay, we've set up this economy. We keep saying we want more investment in the economy, but we're biased against manufacturing, which has been falling away a long way. We've been increasing the cost of energy, which is probably, for most manufacturers, one of the few things that a country can do. I guess to me, a country, if you want good manufacturing, you can either have cheap labour, which Australia doesn't have. We can't play in that market.
Yep. You
can have an educated workforce who can come up with novel solutions and capital and things like that, which we should get a tick on that point. And then the only other thing you can really have is cheap land prices and cheap energy. And we had cheap energy. We should have cheap land prices somewhere, but we're so big, but we don't.
Yes.
So we've sort of seemed to be painting ourselves in the bucket. We're not going to play in that space. And so I don't know if you've seen anything coming out of this or any. And then there's this other problem with, you can get productivity gains from manufacturing are much easier to measure than productivity gains from services.
Correct.
And probably easier to get because you can, yes, I'm just improving my process every year, whereas the services is obviously dependent upon people and wages are going up.
Yeah. So certainly you've hit on that trio of problems that we have in Australia with manufacturing. Wages are high, property costs are high, regulation is high here as well. Energy costs are high. So, you've got these major problems that all come together. We're just not going to be a manufacturing powerhouse here, not like the US where energy is much cheaper. And there are lower wages there in some of the states and some places.
Yeah.
And so they can choose to manufacture onshore.
And we won't go too much into the energy here. There's a whole extra debate we can do on that one. But I think there's probably the two parts for energy is one is we've got heaps of energy in Australia. Australia's an energy powerhouse, but we've done it to ourselves in terms of we're exporting it. We've opened ourselves to global prices. And so that's one big issue. The other issue which you raised in your article is this bit about incentivizing power generation and getting that lower. And I do want to touch on this because I know Leith and I don't see a completely eye to eye on this one. Leith complains a lot about renewables. I like renewables myself, and I do think the costs are much lower. But there is this intermittency issue, and I do think there's an element we've got wrong in terms of saying, okay, we know that we can produce intermittent energy really, really cheaply, and we know that we can produce, baseload energy at a much more expensive level, and we're trying to manage both of them. We're trying to set pricing that manages both of them, as opposed to saying, well, why don't I set a price for X amount of energy? I want to do 75% of what we know is going to be available, but bid me a price. And if an energy guy wants to team up with if a solar power guy wants to team up with some wind power and some batteries to deliver it across the entire day, great, do it. Or they want to, as opposed to saying, no, you just bid for that hour and that hour.
Yeah. So we need, without a major change to the pathway we're on, with the power systems we've got, prices will go up. They will go up by a lot. And so some of the examples that we've seen, for instance, so Snowy Hydro started out at a $2 billion estimate. Yeah. It's now officially 12, some are saying 16. There was a renewable energy zone in, I think it was Western New South Wales, and it started out, I think it was 650 million, and now they're saying it could be 5.5 billion. So we're just seeing explosive increases in the costs. Building out the grid to accommodate renewable energy is very expensive. Transmission lines are going in and they're costing more than we thought. One of the things I put in my paper was...
Can I also just say quickly on those, part of the thing is all the incentives for these guys, and we've seen it for the last 20, 30 years since we privatised that whole sector, was they get rewarded on, you spend $1 billion, you get a 6% return on that asset. You spend $2 billion, you still get a 6% return on that asset. Do you want to spend $1 billion or $2 billion? And then we've got all these rules to try and stop them spending $2 billion, but they spend their whole time gaming the system trying to get the $1 billion up to $2 billion. And then we've got these regulators who are always behind the ball. And then they're like, oh, we've been cheated for the last 5 years. Oh, let's change the rules. They change the rules, it goes back to $1 billion, and it's rising again. Anyway.
And so some of the basics, and one of the things I put in my paper is, particularly with renewables, and this was something I picked up at a conference 5 or 7 years ago. I was chatting to someone whose business was developing wind farms and solar.
Yeah.
And I was chatting to him, and I said, how do you deal with the costs of building something that's well away from the transmission grid, near power lines? He said, that's not my problem. And I said, but you have to hook up to the grid. He goes, no, that's not my problem. Someone else has to pay for that. And so we haven't yet had that idea that, hang on, we need to incentivize people to use the infrastructure we've got and to put, new generation, ideally as close as possible to the old generation. And where we have that nuclear versus renewable discussion, it is one of the forgotten factors that you can plug a nuclear plant in an old coal-fired plant location and use the same lines. You may need to update them, change them, etc.
Yeah, but largely in the right.
You can do a lot of the
Yeah.
use a lot of the infrastructure. Whereas if you put a wind farm 100 kilometres away from the lines, someone's got to pay for that.
Mhm.
The consumer will ultimately pay for that.
Yeah, and there's two parts to this as well that I want to sort of add on to that is that and this is where I see that the batteries, the whole wind farm, the battery part is like going, okay, this wind farm can produce whatever 10 units per hour, but it's sometimes going to be producing 1 unit per hour. So I still need to build a line that can produce 10 units per hour. Whereas if you said to them, no, you know what, you're getting 3 units per hour, you stick batteries in at your end and just deliver 3 units over the entire term, or solar, same thing.
Yeah.
Deliver me 3 units over the entire day, or whatever deliver me 4 units during the day and nighttime, and right in the middle of the night, maybe a bit less, but something where it's like, it's you guys put the batteries in. We now need to build half the transmission we did because we don't have to cater to the maximum spikes.
Yes.
We have to just cater to the average over the period.
Yeah. So this is one of the interesting things, and maybe it might be another podcast topic for you, getting someone like Aidan Morrison on. The cost of building those batteries, the cost of building the extra infrastructure, you're saying that nuclear is too expensive to build in Australia. Once you include those other items, there's an argument that actually nuclear is cheaper than all of those add-ons with the renewable power.
Yeah. Okay. Well, that one's another one. I think that the numbers.
Get the experts on.
Yeah. Because I think the numbers I always add up, and the bit I go is, if we had done this 20 years ago, I'd be like, yeah, great. But the problem I've got is you have to build that entire nuclear industry out as well. But anyway, let's talk about that at another time. The other one is, for me, is the local battery part, where you're like, all this stuff you said about generation and all that type of stuff is, I'm like, why don't we have a local a local battery company type thing, where it's like, we're paying households who are generating solar right next to where it's needed, pittance now, they're hard to get anything. You've got solar panels, I don't. It's coming out of your roof into mine. You get almost nothing. I pay truckloads for that power. He's actually saying, well, we stuck some local batteries in, exactly as you said. You don't need the transmission lines. And batteries, to me, are certainly one thing that actually makes more sense as a bit of a community thing, because it's I can buy a battery and fill it up, but I'm going to be out for 3 days, and so it's actually not even going to fill up. It's I'm been wasting it, and then I'm not going to run all the way down, and all these things where you can actually say no. When you take 100 people or 200 people in a region, now we've got a much more stable. We can guess at how much it is, and all those transmission issues. Now all of a sudden, even if it's only 50% of our energy is just bouncing around in that local network, we now need half as much energy coming in from elsewhere.
Yeah, so that's the sort of stuff that's coming through, and it's just a question of, do you just leave the private sector to implement that and to do it, or do you have the government coming in saying, we're going to do it, or we're going to subsidise people to do it? That's probably the question there.
Yeah, but it seems to me that if you're, say, East Coast in particular, or everything's in Western Australia, if you're in the part where you're like, it's all these regulated industries, we try and set up the rules to do things, then we wait until people try and cheat, and then we try and come up with new rules so they don't cheat, is much worse than just saying, hey, how about we just do what we wanted to do in the first place? Let's organise this stuff to try and minimize. As you said, everyone's all about, because we've designed the system to each individual component is, okay, you try and make your maximum profit. I'll try and make my maximum profit. Somebody else try and make. We haven't got that whole system by saying, okay, maybe we stick a few community batteries in. We don't need to build all these transmission wires. We don't need to do all this other stuff. Whereas you start saying that, the transmission going, oh no, you need to I need my money, And the wind farm guy, oh, I need to build my wind farm, and somebody else's, coal-fired plants, or everyone's got their own barrier to push, as opposed to Anyway. So I feel like there's a little bit they're talking about on the power generation, but it doesn't seem to be holistic and game changing. It seems to be just, how do we change the rules a little bit to try and get things a little bit better?
Pretty much just sit back and watch your prices go up.
Yes. Now, there's a couple of things. So just aware of time and everything like that. Actually, might go to a quick sales message.
We'll be back again shortly. If you like what you're hearing but want a low-cost passive option, Nucleus Wealth is the first to offer passive direct indexing in Australia. The first generation of passive investing was index funds. The next gen was ETFs. Now, direct indexing is here with significantly more customization and control. The benefit of direct indexing is you can add or subtract investment themes, and we have almost 100 different options to choose from. For example, you could buy an international share direct index portfolio that excludes fossil fuels and arms manufacturers and has a tilt towards cybersecurity and cloud computing. Alternatively, you could buy a portfolio with no screens and an extra exposure to nuclear power and defense contractors. You can find out more at nucleuswealth.com. Now back to the show.
Right. So back to some of the other things you spoke about, the minimum wage. So, sort of your thoughts on sort of simplifying that minimum wage?
Yeah. So one of the things about Australia is we do have, depending how you measure it, whether you adjust for currencies or not, regardless of the measure, we have one of the highest minimum wages in the world. And on some of the measures, it will be the highest in the world. So for our lowest income workers, they are paid well for the hours that they work. Housing is unfortunately offsetting a lot of that with rents skyrocketing in recent years. We've talked about that already. But there's really two main problems we have with the minimum wage in Australia. One is it's not being paid consistently. And that is there are just plenty of employers who are happy to cheat their employees. And I had, basic jobs when I was in high school and uni, and it was just par for the course. For instance, at restaurants, they'd clock you off at 11:30 and you'd work till 12 or 12:30. That last half an hour, an hour, you didn't get paid for it. So that sort of stuff is very common. There are people out there who they might know the minimum wage is, let's say, $25 an hour, roughly. And they say, I don't care. I'm just going to pay 21. And if I get caught, well, I'll deal with it. So it's not being paid, or it might be paid cash in hand. So, you might end up getting the same number net, but the tax is just disappearing from a taxpayer basis.
Yeah. And can I add in as well, there's a lot of minimum wages, like there's, depending upon, the number of years and the age and the industry you're in, and even within industries, there's like, small differences between this one and this one and this one. And so for employers, when they say, there's definitely bad ones as well, but I do think as well, like when there's part about saying, okay, I had 12 different minimum wages for all these different ones, and I genuinely tried to pick the right one, but I didn't get the right one. I think there's also that element of it as well. And there's probably a little bit disingenuous in people going, well, I've got 12 to choose from, I'll choose that one,
Yeah.
And so having a simplified rules, I think there's that over-regulation part as well as a few simple, dumb rules. Here is one number, everyone needs to be above that, might be easier than and safer than here's 1,000 different rules to apply in different situations.
Exactly. You've just summed up the second problem with minimum wage. So one, we're not paying it, and two, it's too complicated. Particularly for small and medium-sized businesses, you should not have to go to a lawyer to unravel what the laws are, which industry, which demarcation dispute do I have to deal with, where do my employees fit. There should just be one national minimum wage, and people can say, if I pay that, if I meet those terms and conditions, then it's all above board. I'm not going to have people chasing me. I'm not going to end up in court or potentially in jail. So it does need to be simplified. And that's, it's a choice. And often unions are part of this. They want it to be complex. They want it to be hard. And big businesses...
It justifies the jobs of the unions to make sure you're getting paid right.
Correct. And for the big businesses, they often want complexity and regulation as well, because it makes it too hard for small businesses. I've gone through that exercise when I hired someone to help with my business, and looking through the rules, and you very much could say, is it this number or this number? What are their duties? How do they qualify? At the end of the day, the simple answer, if you're an employer and if you're in a business that's got some margin, you say, well, I'll just pay clearly more than the minimum, and then there won't be any problems. But if you're running, a business, particularly something like in the food industry where margins are tight, some of them choose to cheat and just not pay the taxes and the wages they should. But, for the ones who are trying to do everything above board, paying the minimum wage, is going to be one of those things that's probably part of your business, because if you pay too much more, are you going to get that extra productivity? that's that balance.
Yeah, and then the other part of that is the big businesses versus medium and small businesses. Is you go, okay, the cost of compliance is whatever, $300,000 a year to hire somebody and do all this stuff like that. And you're like, yes, I have 10,000 employees. I can amortize that cost across everyone. I have 100 employees. All of a sudden, it's like, just a minute. All this money I could have been paying my workers. I'm actually paying somebody else to make sure that I'm not cheating those workers when I pay them minimum wage. So yeah.
And I think given the number of cases we've seen across supermarkets, universities, restaurants, so many industries getting caught up in this, it should be apparent now the system is too complicated. And I guess for those who get uncomfortable with the idea of having a simple set of rules, the reality of the marketplace for workers is workers can leave any time they want, pretty much. There's very few restrictions on workers leaving, unless it's something like, Defence Force paid for your university degree, so you've got an X number of years of work to pay it off. But the vast majority of people, you can just pack up and leave tomorrow. If someone gives you a better job offer, if your employer's only going to give you the minimum wage, if you challenge and say, no, I'm doing better than that person next to me, I want a bit more, and they say no. Well, you're out the door in a couple of weeks' time because somebody pays you extra.
Yeah, in lots of industries. There's lots of other industries where it's like, you're a sandwich maker and they're like, fine, you want more money? Yeah, you can make them quick, but I can still get something else. Yeah, but I do think there's some employers who are always going to pay the minimum wage regardless, and there's other ones who recognise that actually I don't want to hire somebody else. I'll pay you a few dollars extra. Yeah.
Correct.
But it does help then the better businesses, doesn't it? Yeah, well, they can pay. Yes, excellent. Okay. The other big one, there's been a lot of sort of what it's called sort of pearl clutching about intergenerational issues, but I haven't seen anything that's actually meaningful in terms of and basically the idea is that yes, we've developed this system where a nurse / school teacher / firefighter or whatever 40 years ago could easily afford to buy a house, and now they're coming to sell their houses, and the houses are worth far more than the kids could ever afford, and there's literally millions of dollars, and it's turning into a bit of a lottery system. Did your parent happen to buy a house in the right suburb at the right price? Do you have more siblings or less siblings? And we're sort of creating that, people literally getting millions of dollars through that. I haven't seen anything really about them actually trying to genuinely approach that. I think it's sort of, there's a lot of thoughts and prayers to the victims of this, but there's not a lot of we're actually going to do something about it.
Yeah. And I think in some ways, what I wrote and my 10 suggestions do really hit on that issue. You won't necessarily read it and go, oh, okay, he's clearly talked about intergenerational issues. I haven't. But changing the tax system, saying we're going to decrease income tax and increase the GST, it does mean that people who are not working will be a little worse off, and people who are working will be better off.
And land taxes as well.
Land tax is another obvious one. Again, you bought the house 40 years ago, you've never paid anything more than the stamp duty at the start. Well, you are going to start to pay something. And for those who are concerned that, older people don't have income to pay the tax, there's plenty of examples overseas if they say, okay, you can let the tax build up 10, 15, 20 years. When you sell the home, when you pass away, when you moved into an aged care facility, then we will collect the arrears and we'll have charged, government bond rate plus a small margin. So there are plenty of ways to deal with that cash poor, asset rich side. Pensions, increasingly, the pension is going to come into focus. That if you've got a $2 or $3 million house, really the land tax would encourage you to sell that and move into something much smaller, which actually suits you. Give the house up to someone who needs the bedroom, who's got the kids that need the bedrooms. So the land tax helps with that. But we definitely have a situation where people who are older, who have substantial wealth, are still getting pensions because they've structured things correctly. And that's the most obvious example of intergenerational unfairness.
Yes, absolutely. And we've spoken on this podcast before about the various tax incentives that are available for you, particularly through the superannuation system. And for anyone, Cameron Murray, we had Cameron Murray on, and we spoke about all the ways to get this money and all the reasons why it's wrong as a society that we're allowing people to get this money, and all the money that's being sort of wasted in terms of this welfare. And I think that sort of flows through into that. The other one I wanted to bring up is this whole tax deductibility part. That's a similar to me, sort of fits in that problem that what we're doing is, and I'm going to use EVs as an example, and sort of fits a little bit with this intergenerational, but it's also about the rich versus poor parties. There's an incentive to try and get people into electric vehicles, and that incentive then means that they're going to effectively get a tax deductible. And so what that means is, if you're earning 200,000 or 250,000, you can have an EV at half price. If you're earning 60 grand, you can't. And so it's that whole part about, well, just a minute, if we're trying to encourage something, we should be encouraging it equally, or in savings into super. We should be, if we're giving somebody on a 47 cent, we're giving them a 30% discount on their tax bill. Somebody who's on 30 grand or 40 grand or something like that, we're actually charging them to save. And so there's a rich, poor, and intergenerational, and part of it seems to be, well, old people have more time, they worry about this stuff more, they've got tax advisors.
Yep.
Rich people are in the same bit, they've got the tax advisors, and so we let them take advantage of all this.
Yeah, I mean, that same criticism of EVs has been made of solar and batteries, that those who own houses can benefit. Those who own units, unlikely to be able to benefit. Those who are renting, you get nothing.
Yeah, absolutely. Some of the other ones I just wanted to raise, just with Australia, particularly about Australia. So manufacturing versus services. We spoke about Australia having such low levels of manufacturing, and that's one of the reasons is you can, there's definitely more productivity gains to be got from manufacturing. Services is very hard to measure, and particularly we've been seeing this big expansion of the NDIS. How do you measure? I mean, not how do you measure? They definitely measure stuff, but measuring productivity in that is a lot harder in terms of saying, okay, you take somebody with severe needs and you give them more support and stuff like that, and you can sort of measure that. That's probably almost definitely something that's done well, or do I take I've just taken 60 kids with very marginal needs, but they've got richer parents who know how to navigate the system, and now they're all getting extra money. Is that a productivity gain benefit for everyone, or is that just more middle class welfare? And so,
certainly there are measurement issues around services and increasing the productivity of services. It's something that's been talked about for decades. I think the introduction of AI will be helpful there. And so some of the things there is just, can you actually have a person talking to the AI and communicating with them, and that's resolving some of the problems, and then kicking it off to a human for things that are tougher to resolve? Is it possible we can help more people live independently because of AI, with a backup that if something goes wrong, they can, essentially say a voice command or press a button, and a human can come and help.
And you've got a tracker on that monitors blood pressure or whatever it is, and heart rates, and heart's elevated, right? We need to get somebody there, or we need to call and make sure everything's fine, or whatever it is. Yeah.
Correct.
Yeah, absolutely. I think there's some benefits there. And the other one, big issues, particularly for Australia, let's do the easier one, and then we'll stick on the harder one last, and then we'll wrap it up. But so mining is always a tough one for Australia, just insofar as how do you measure it? Well, it's in a big picture sense, it's measured as how many tons per worker hour are you producing, which sounds fine. If we can produce more tons with fewer worker hours, that's great, and automate, and I can see that productivity. But the flip side is, actually, if the iron ore price goes from $50 to $150, and so now we're actually willing to spend, twice as much worker hours to pull out, the same amount of iron ore because the prices are so much higher. From a company's perspective, it makes perfect sense. Possibly from a global perspective, it's a good use of capital, but it might make Australia's productivity look worse or better than it should do, just because of what's happened with metal prices. And then secondly, you have the whole CapEx issues. I'm out building a mine. My productivity is absolutely terrible. I'm not producing anything and putting in lots of hours. and then all of a sudden it's fantastic once it gets up and running, and that can just really distort Australia's overall productivity. Yeah, the mining stuff within that short periods of time.
Yeah, that's definitely true. And good analysis these days of productivity and growth in Australia is often excluding mining and then mining on a completely different line of its own, just because of those factors. But you're correct, it's hugely volatile with prices going up and down. I think, though, the mining sector is a huge contributor to our economy. We would have a much lower standard of living.
Oh, absolutely.
Enormous amounts of taxes flowing through to pay for all sorts of government services.
Yes, it should be more or less. Yeah, there's definitely some stuff. I think they're probably one of the ones I would target as one of these shifting assets into my Singaporean head office. and I'm pricing it to that one price to them, and they're selling it to somebody else or whatever. But yeah, there's X that though. But I think I guess all I'm flagging, and I do think they're one of the areas where productivities, they're hyper focused on productivity.
They've been very good
some of
at
the best.
putting in AI. Can we run a mining truck? Can we run a train without a driver?
Yeah. I think they probably have very good productivity. I believe from the ones that certainly I see, and certainly the large ones.
Yeah.
But I think their contribution to overall statistics should be absolutely pulled out, because you look at it and say they look like they're doing terrible, but they actually might be doing fantastic. It's just that the way it works.
Correct.
And then the other one, so my initial thought, and I want to hear your pushback on this. We spoke briefly about it before. So my initial thought would be Australia's full of oligopolies, and I'm going to use the retail sector, the shopping grocery stores as an example, just to see. My initial thought would be that if you've only got 2 or 3 major players, they would be they would compete less with each other on price, and you might find the productivity gains aren't as good. The flip side that I think you get from is maybe economies of scale. But I guess it's this question about do the companies then actually just capture all that as profits anyway? So would we be better off having 300 medium-sized grocery stores out there, or grocery chains out there, or are we better off having three large ones? And
Yeah, so the supermarkets is a good one because they've been criticised a lot, but prices at the supermarket have gone up substantially since COVID over the last 5 years. And, people can think of items and go, well, that used to be $3, now it's $5. That's way more than inflation. Inflation's been high, but that's far more than inflation. So that sort of stuff is real. The data has shown that the margin increase for supermarkets over that time period has been pretty limited. So what they have benefited from is you used to sell $100 worth of groceries. Well, now it might be $150 worth of groceries after 5 years, and all the inflation and also the population growth. Well, of course, you've naturally got a high level of sales. If the margin is the same, your profits have gone up fantastically. So we haven't seen the Australian supermarkets earning super margins. We haven't seen them, able to really extract profits well beyond what we're seeing in some of the overseas markets. So it doesn't look like there's a huge lack of competition. Aldi's here. Aldi's giving it a go, certainly on the price side. And I've got plenty of friends who they've got a local Aldi and that's their preferred shop.
Yeah. So can maybe let what I'm more interested in is a big picture, and I guess it's hard because it's counterfactual in Australia. I guess what it is that the thought of saying, if we had fewer oligopolies in Australia and maybe a more, say if we had an ACCC that was much more focused on saying, no, you can't have any more than 10% market share, that's it. You capped out. Would that actually be a productivity enhancement, or is it helpful that Australia's got oligopolies and they're getting economies of scale? And that's actually, which is a better productivity model, I suppose. And I'm sure it's industry, in some industries, it'll be more important than other ones, but I guess it's a broad scheme for the whole of the economy.
Yeah, I think I'm always going back to, does it look like they're extracting super profits? And if they are, it's something you want to do something about. So the reality is the infrastructure is probably where the super profits are. That's one easy one to say, that ports, ports for the ships, airports, the numbers that are
Natural monopolies.
natural monopolies, and they have been exploiting them. And the ACCC is like, oh, we don't really want to do it, but everybody knows they should.
Yeah.
Where it's far easier is something like supermarkets and banks. If you go back to pre-GFC, the return on equity for banks was fantastic, great business to own. Obviously, owning them through the GFC, all the capital raisings, you got massively diluted, share prices didn't go so well. But you look at them now, they are much more utility-like in terms of their profitability. And if you want to get a home loan, there is huge competition. The Big Four plus Macquarie, they've got online competitor brands that they have within their own house as well. So UBank is a classic one that a lot of people use.
Yep.
Then you've got the regionals, you've got credit unions and building societies, you've got securitization issuers. You have dozens and dozens of options to get a home loan. And margins have just come down and down and gotten sharper and sharper. So that's one where, the four major banks, I think, is something like 80%, but there is high competition.
Yeah, and I think there's a market where you can say, okay, there's domination, but as you just named a whole bunch, there's hundreds of people I can use, maybe not hundreds, but there might be another 40 or 50 who I can genuinely use, and actually they don't care that I live in Melbourne and they're in Sydney or whatever it is. They're happy to lend to me, which is, I guess, the difference to the grocery store example, where it's like, well, it's great that there's shops selling cheaply to Brisbane suburbs, but if I'm in Melbourne, there's I've only got 3 options to go to here or whatever it is.
And I think for a lot of people, if they want to focus on competition, particularly for supermarkets, is can a cheap butcher or a cheap baker or a cheap fruit shop get a spot in the shopping centre? Or does Coles and Woolies have so much control over the shopping centre owner that they can say, no, you can't have a spot here? Are there predatory pricing practices where, for instance, if they do have a cheap fruit shop, they cut the price of their fruit to compete, and then 2 kilometres down the road, there's no fruit shop, so the fruit's twice the price? Are the predatory pricing practices that someone like the ACCC can look into? Those are things that potentially could be there. But I think with supermarkets, yes, the zoning property controls stop supermarkets being built and opening. If we took that away, I'm not sure we'd see a whole bunch of new supermarkets setting up and saying there's easy money here.
Yeah. Excellent. Well, thanks a lot, Jonathan. And if there's anything else we should highlight, so you can get if you want to sort of talk quickly to people where they can get more of your stuff if they're interested.
So the Narrow Road Capital website, jump on there. You can see the articles I've written, the recent productivity article. There was also one on migration and the cost of housing. You can sign up for the monthly newsletter. That's free of charge. But Narrow Road Capital as a business, it's, we're talking a lot about productivity. Narrow Road's not a think tank. It's something I do as a community service, essentially. But what Narrow Road Capital does, we work with family offices.
Sorry, you're writing as a community service, not your investment.
Correct. Should say that. So, Narrow Road as a business, we work with family offices, not-for-profits, institutional investors. We focus on Aussie credit assets for Aussie clients. And the aim of the business has always been higher returns and lower fees. And over the last 13 years, that's what clients have received. Now, when I say higher returns, where that came from was when I started the business, I was looking at what were the big super funds investing in and what sort of returns they're getting. I was like, wow, they're just not trying. And to some extent these days, it hasn't changed a lot. They're doing more things and more interesting things. But if you're interested in the debt sectors in Australia, and there are plenty of things to do where you don't have to increase your risk that much and you can get a substantially higher return. And so that's really the focus of Narrow Road, is stepping away from the traditional fixed income that maybe gets you, 0.5% or 1% over the cash rate. What are those things that can get you sort of 2 to 4%, and occasionally some things that go a bit above that? Beyond that, where take that trade of give up some liquidity. So a lot of things we do are illiquid, but with maturities of 6 to 36 months, and get some substantial additional return for that.
Yeah, excellent. Without taking that extra risk, because I guess the one thing I always highlight to people is, particularly in the credit market, you want to find somebody, if you're going to do it, find somebody who you do think they've got the risk controls, because it's really easy to, as I said, it's really easy to lend money. It's getting back the money that's the important part.
Absolutely.
And it's really easy to advertise for people to borrow money and say, yeah, no worries, I'm going to pay you 12%, but you may not get that. You get that 12% for the first 3 or 4 payments, and then it might when it tails off and you only end up with 50% of your capital, it's it could be a high price to pay.
Yeah, and we're definitely seeing defaults come through in the private credit space in Australia and overseas. Some people simply did not have lending skills and did not have good credit skills and did not exercise discipline, and we are seeing losses come through in sizable ways. And probably the most obvious one that's been in the newspapers almost weekly has been the John Adjamas pub empire, and so many lenders getting caught up there. Allegations of inflated valuations, lending money with expectations that asset prices would increase, that renovation works would be done and they weren't. Just some really basic credit skills that seem to have gone missing in some of those processes.
Yeah. Excellent. Well, thanks a lot, Jonathan, and we'll look forward to having you back again. Just a reminder for everyone, if you hit the like and subscribe button, we're here every Thursday, 12:30, and drop in any questions if you want into the chat, and we will try and deal with them as we go. Thanks, and we'll speak to everyone next time.